Joining us now from the White House, National Economic Council Director Lael Brainard. Director Brainard, it's good to have you. Good morning.
Good to be here.
So what is your reaction to what was kind of a mixed and divergent jobs report?
Look, I think when we look at the strong job creation, 272,000 jobs in the month, as well as very high participation among prime age workers, the highest rate ever historically of women working. It's a good jobs report for American workers. It suggests that the economy continues on a strong but stable course. And so generally speaking, good news. And of course, real wages rising. That's also good for American workers.
So what do you make of the fact that the household survey showed 400,000 subtraction on jobs? The unemployment rate ticked up to 4%, first time we've seen that in a few years, and the labor force actually shrunk.
So, you know, there's some churn in those numbers that is perhaps related in particular to workers in the 20 to 24 age bracket who may be transitioning into the job market during this time of year. I think it's a little too soon to tell, but you know, if you look at the unemployment rate under President Biden, the unemployment rate has now been at or below 4% for 30 months, 2.5 years. That's the longest stretch in 50 years. So we continue to see very low unemployment. And again, if you look at prime age workers, participation rate tick back up is high. Women employment and participation rate is very strong. So lots to like overall, even as we're seeing measures that the labor market is coming into better balance.
Do you think that the inflation rate that the Fed targets, I know you're not on the Fed anymore, but that the Fed targets, like, we want to get to 2%, you want to get to 2% as well, so Americans don't feel that crunch. Do you think it can get there with wages rising at this level and job creation at this level?
Yeah, you know, what we've seen is continued progress. It's always bumpy, but PCE inflation now at 2.7%, moving down to the Federal Reserve's target. What's interesting is if you look on an apples-to-apples basis, the comparable measures of inflation for the U.S. compared to its G7 peers, we're actually at the same level as the European peers, Canada, some other G7 members, and it's really that anomalous owner's equivalent rent that is really the outlier here, and of course that's not included in some of those comparable measures. But look, costs are still too high. We were very pleased to see that the price of gas at the pump came down below $3.50. That's very important to the president, continuing to fight to lower costs, the costs that Americans pay every week, like gas, like groceries. We're going to keep fighting on that front.
I'm glad you brought up energy, Director Brainard, because there's been some analysis of the White House's management of the SPR. I think some estimates are that if it were an energy trader, you'd be beating the benchmark by about 7%, given the back and forth on filling and releasing supply. Are you sort of guaranteeing that you'll manage gas prices, or at least oil prices, throughout the summer and into the election?
No, I think what is important, though, is the president knows that for Americans, gas prices are a very important, often weekly expense. And so to see gas prices coming below $3.50 is a very positive thing. And we recognized that in the wake of Russia's invasion of Ukraine, that it was important to give that relief to consumers. So the Strategic Petroleum Reserve has been an incredibly important tool. We've been refilling it in a way that, as you noted, I think has been smart, and we'll continue to be very focused on that. The president's going to focus on gas. He's very focused on grocery costs. He's been calling for big grocers to bring prices down, and we actually are seeing many of those grocery chains now answering the call with price reductions on thousands of items. So that is going to be a continued focus for the president, as it is for so many families around the country.